Welcome, everyone, to the Finwell Daily Brief. It is Friday, June 20th, 2025. We're here, as always, to give you the crucial market insights you need right after the closing bell. Okay, let's kick things off with our financial fact of the day. And this one's pretty significant. We're seeing domestic institutional investors, the DIIs, now cushioning over 80% of FII outflows. Foreign institutional investor outflows, that is.
Yes, that's a huge number.
It really is. And what it means for the Indian markets is, well, fundamentally increased resilience.
Exactly. Less volatility compared to, say, 5 or 10 years ago when FII flows really dictated terms.
Right. It shows the growing strength of India's own middle-class wealth, more household participation in equities.
A sign of deepening capital markets, definitely. A structural shift.
Absolutely. So with that backdrop, how did things actually play out today? Let's unpack this and dive into the exciting details from today's market closing. And it was quite a compelling story today. The markets really showed some strength. As of 3.3 EIM IST, the Nifty 50 closed at 25,112.40. That's up 319 points, or about 1.29%. A really solid gain.
Strong move.
And it wasn't just the large caps. The Nifty Midcap 150, it closed at 21,285.45. That's up 262 points, 1.25%.
Good to see the mid-caps participating strongly, too.
Yeah, and even the Nifty Small Cap 250 joined in, closing at 16,916.95, up over 100 points, 0.62%.
A bit less percentage-wise, but still positive momentum.
Exactly. And the Nifty Total Market Index, kind of wrapping it all up, finished at 12,959.50, up 1.18%. So really broad-based enthusiasm today.
And you know what's fascinating here is how the broader financial landscape sort of supported these gains, or at least it didn't hinder them.
Oh, like what?
Well, look at India's 10-year government bond yield. It stayed remarkably steady today, 6.36%, unchanged from yesterday.
Okay, so no jitters there.
Right. It signals, stable policy expectations, a balanced risk environment, even with the equity rally.
Interesting. And the currency, the rupee.
Also quite steady. The NRUSD rate traded around 86.57 per dollar, hardly any change. And the dynamic there is interesting, too. You had global dollar strength, which normally puts pressure on the rupee. But that was pretty much offset by the strong domestic equity inflows we saw today. Shows that internal strength we were just talking about.
Yeah, that DII cushion may be playing a role indirectly, too.
Could be. It all feeds into the sentiment.
Okay, so stable bonds, stable rupee. But the equity market wasn't just stable, it surged. Here's where it gets really interesting. The markets, Sensex and Nifty, both rallied over 1% each, snapped that 3-day losing streak pretty decisively.
Big turnaround.
And the main driver, it seems to be the Reserve Bank of India, the RBI. They eased the norms for project finance, specifically reducing the provisioning requirements for new project finance loans.
That's right, a significant move. Basically, banks don't have to set aside as much capital against these loans now.
Which frees up capital, right, for more lending, especially in infrastructure.
Exactly. It's a direct boost to sentiment in that whole infra space. Clears a potential bottleneck for funding new projects.
And we saw that impact almost immediately in specific sectors, didn't we?
Oh, absolutely. The Nifty PSU Bank Index, for example, jumped 1.59%. That's a strong reaction.
Yeah. Which banks were leading that?
We saw top gainers like Punjab National Bank, Union Bank, Canara Bank, Indian Overseas Bank. They all did very well following those RBI guidelines.
Makes sense.
But it wasn't just the banks. The positive ripple effect spread. Look at Power Grid, Mahindra and Mahindra, both up over 2%.
Wow.
It shows how interconnected things are. Easing financing norms helps the banks, yes, but also the companies doing the projects, the infrastructure players, the capital goods makers.
Right. A broad impact from that one policy tweak.
A very targeted and effective tweak, it seems, at least for today's sentiment.
Okay, let's switch gears a bit and look at the technical view for the Nifty 50. Closing above 25,000. That feels like a big deal.
It is. Psychologically and technically, closing above a key round number like 25,000, it definitely signals a positive undertone in the market. Momentum.
So what are the chart watchers saying now?
Well, the general view is that if Nifty can sustain above this 25,000 level, if it holds, then the momentum could actually accelerate. You could potentially see moves towards, say, 25,200 in the near term, maybe even up towards 25,800 if the buying pressure continues.
Okay, so potential for more upside. What about the downside? Where's the support?
The key support levels analysts are watching are around 24,600, and then below that, 24,500.
Right.
So yeah, connecting this to the bigger picture, holding above 25K is pretty crucial for keeping this bullish sentiment going. It's kind of the springboard for the next potential move up.
Got it. Very clear. Now, from the broad market view, let's zoom into something very specific making news today, the IPO market. Specifically, an SME IPO, Maya Shield Ventures. It's an engineering and construction company. They launched their initial public offering today.
Right. An SME IPO hitting the market.
Yeah, the price band is set at 44 to 47 rupees per share, and they're aiming to raise about 27.28 crore rupees.
Okay. Now, this raises an important point, maybe a question for potential investors, especially when looking at SME IPOs.
What's that?
Well, while the sector engineering and construction might have some tailwinds right now, there are a few things, let's call them red flags, that you should really be aware of with this particular offering.
Okay, good to know. What are they?
First off, the high minimum investment. One lot is 3,000 shares.
Wow, 3,000 shares.
Yeah, so at the upper end of the price band, 47 rupees, that's nearly 1.41 lakh rupees just for one lot.
That prices out a lot of smaller retail investors, doesn't it?
It certainly does. It limits accessibility significantly. That's the first flag.
Okay, what else?
Second, look at their financials. The profit after tax margin, PT margin, is moderate, around 6.63%. Not terrible, but not stellar. But combine that with a high debt equity ratio of 1.6 here.
Ooh, 1.60 is quite leveraged.
It is. It tells you it's a very capital-intensive business, which construction often is. And it's cyclical, too. Its fortunes depend heavily on the broader economic cycle. High debt in a cyclical business adds risk.
Definitely. Any other flags?
Yes. Third is client concentration. Their revenue depends quite heavily on just a few large projects.
Ah, so if one big project gets delayed or canceled.
Exactly. It could have a disproportionately large negative impact on their overall performance.
Mm.
So the critical take here, the bottom line,
Yeah?
despite the sector potentially doing well, these factors have high minimum investment, moderate margins with high debt, and client concentration. They combine to make Maya Shield Ventures, frankly, a high-risk bet, especially if you're a more conservative investor.
That's a very useful breakdown. And speaking of SME IPOs and minimum investments, this actually ties into a regulatory development, doesn't it?
It does, perfectly. SEBI, the market regulator, has actually proposed raising the minimum investment amount for all SME IPOs.
From what to what?
From the current level, which is typically around 1 lakh rupees, up to 2 lakh rupees.
Doubling it. Wow. What's the thinking behind that?
SEBI's rationale is pretty clear. They want to improve the quality of investors participating in the SME segment, meaning they hope to attract more serious, perhaps more informed, and better capitalized investors, and curb some of the excessive speculation and volatility that we sometimes see in SME stocks post-listing.
Okay, so trying to make it a bit less of a wild ride.
Kind of. The idea is that a higher entry barrier might filter out purely speculative traders and bring in investors with a longer-term perspective, leading to more stable price discovery.
And connecting it back to Maya Shield Ventures.
Well, if this proposal goes through, it would make IPOs like Maya Shield, which already has a high minimum ticket size close to 1.5 lakhs, even less accessible to the average retail investor. It really highlights the direction SEBI seems to be pushing the SME market towards.
Interesting times for the SME space then. Okay, let's pull back and summarize the overall market outlook. So what does this all mean for you, the investor, listening in today? We saw a sharp rebound, that's clear. The RBI's move on project finance norms was definitely the catalyst.
Absolutely. It gave a solid boost to infrastructure stocks and especially PSU banks.
But what about going forward?
Well, as we discussed, Nifty closing above 25,000 is technically positive. That's a good sign.
Yeah.
But the key word is sustaining that level. Further upside really depends on holding ground there.
Right.
We also saw stable bond yields and a steady rupee, which suggests that the market isn't overly panicked, kind of a balanced risk environment. But you always had to keep global cues in mind.
True.
And as we just talked about, potential regulatory changes like SEBI's proposed SME IPO rules could impact sentiment in that specific segment.
So, the advice?
Generally, focus on quality. Quality large caps might be prudent. Infrastructure, given the policy push, could remain interesting. Maybe some defensive sectors, too, if volatility picks up. But exercise caution, especially with high-risk SME IPOs like the one we just looked at, and maybe be careful with mid-caps that are heavily leveraged.
Sound advice. Okay, now, before we wrap up, we need to talk about something really important. A crucial warning for everyone participating in the markets. Beware. We need to talk about something called spoofing. Have you heard of this?
Yes, and it's unfortunately quite prevalent. It's a deceptive tactic, a form of market manipulation.
How does it work exactly?
Basically, fraudsters place large buy or sell orders that they have absolutely no intention of actually executing. They're fake orders.
Okay. Why? What's the point?
The point is to create a false impression of demand or supply in the market. to trick other traders. If they place a huge fake buy order, it might look like there's strong buying interest, potentially pushing the price up.
Ah, so they create false pressure.
Exactly. False buying pressure or false selling pressure. They manipulate the order book visually to lure other traders into buying or selling, which then moves the price in a direction that benefits the spoofer's actual, often hidden position.
Sneaky. How can you spot it? How can you protect yourself?
It can be tricky, but watch out for sudden, really large orders appearing in the market depth. Orders that seem out of place or significantly change the bid-ask spread. And then watch if those large orders disappear just before they would actually get traded. They vanish into thin air. That's the spoof. It's like a phantom order.
So look for orders that seem too good or too bad to be true and then vanish.
Pretty much. The key is not to react impulsively to those sudden, suspicious changes in the order book. Rely on official exchange data. Look at actual traded volumes, not just the order book depth, and be skeptical of those fleeting, massive orders.
Okay, so stay calm, be skeptical, and focus on real trades, not just the order book noise.
That's the best defense. Understanding the tactic helps you avoid getting caught in the manipulation.
Really important advice. Thank you for clarifying that. All right, that brings us towards the end of this 65th edition of the Finwell Daily Brief. Quite a day. A strong market rebound fueled by the RBI policy shift, boosting banks and infra. We looked closely at the MyShield Ventures SME IPO and its potential risks. And we highlighted the importance of watching regulatory shifts like SEBI's proposed SME rule changes, and crucially, staying vigilant against manipulative tactics like spoofing.
A lot to keep track of.
Definitely. If you found today's brief valuable, please do hit that subscribe button for the Finwell Daily Brief. Get these insights delivered to you daily. And if you have questions, thoughts, or just want to connect with us, please find SOS Finwell on LinkedIn. We always appreciate hearing from you.
And as we leave you today, let's reflect on a timeless piece of wisdom from Warren Buffett. The stock market is a device for transferring money from the impatient to the patient.
Food for thought indeed. Finally, our standard disclaimer. This report is created for informational purposes only. Market data is sourced from SEBI-registered exchanges and regulatory filings. Please always consult with a certified financial advisor before making any investment decisions based on this or any other information. Thanks for tuning in. We'll be back again soon with the next Finwell Daily.